think that this is the decade of the women entrepreneur. I mean, there is a lot of talk going on, there's a lot of noise, there's a lot of discussion, a lot of visibility for women entrepreneurs, and I think, you know, our time is now to really seize this. And ASTIA is certainly really capitalizing on this and partnering with the many organizations that are also striving to even the playing field, if you will, provide additional capital, I mean additional access to capital, of course, but it also strategic partnerships and advisory work. You know, there's many hurdles to getting to exit or to driving a successful company. Funding, of course, is one, but it's also the network, it's also the advisory services, and really understanding how you best position your company in the marketplace. So I would say that's the first trend. You know, this is your time, and you know, I would stand up and take advantage of it. That's not to say that it's not tremendously difficult. There's a lot of work that goes into entrepreneurialism, and what I love the most about the entrepreneurs that have gone through ASTIA is that they admit that. They say that it is tough, it's a slog, and it's a lot of hard work. One thing that, you know, to the point of it doesn't take $20 million to start a company, you can start it on a very small amount of money, is that there's a lot more patience and tolerance for iterating and reiterating. So I tend to, in my experience of working with women entrepreneurs and investing with women entrepreneurs over the last several years, is that oftentimes we want it to be perfect. Forget it. Get it out there, get feedback, go back to the lab, redo it. Get it out there, get feedback. That's the way you're going to get yourself known, and that's the way you're going to get immediate feedback. And with technology today, the feedback loop is so much faster. So utilize that to your advantage. The other thing that I would say is, you know, during these challenging times, really use your resources and your networks. It's really critical. Men do it all the time. To the men in the room, I commend you for being here. I'm sure many of us in this room have been the only females in the room before. So, you know, I think we all recognize that it takes men and women to make things successful. And there are proven studies prove that the ROI in companies that have men and women in the boardroom are more successful and more profitable than companies without. So, and I think that's why it's really timely for us women right now, is because people recognize that. The companies are recognizing that. They want the talent. So, you know, get out there, and I encourage you just to continue to have
Well, I've been doing venture capital for 30 years. I started in '81. I was at a big venture firm. Actually, it was tiny. Oak Investment Partners, when I joined it, had $25 million under management. It's now managing billions of dollars. The industry was expecting companies where there were always technology companies that were business selling to business. It needed about $20 to $25 million to get to profitability. You got the company so that you were about $100 million run rate, and one of 3 investment bankers took you public. Robinson Stevens, Hamburg & Quist, Montgomery Securities. And it was a model that was very expected. Then the market was so successful, it brought more money in. So the model could change. But suddenly you needed more money to start a company. You started needing $50 million, $80 million, $200 million. So the skill of not just designing a product, but raising capital became something critical of the CEO. The technologist no longer could be the CEO. And there was a big fight of how often CEOs were replaced by venture people, because the model was really broken. The technologist who really had the passion and the drive about the company was removed too early in the process to help bring in more money. We went through this huge bubble of the internet and a huge bubble of the optics market where vast quantities of money were wasted. The market during that time of the development of the internet changed from one where it had to be a business to business to a business to consumer, and then it became a consumer to consumer model. Well, if you use the internet and the communication devices that we have today, the cost of getting a product, a simple product, to another person, where they convey a check to you, has been reduced. So you don't need an entire business. You don't need $100 million. The whole wave of new businesses starting really allows for very efficient deployment of very small amounts of capital, which has opened doors for every type of entrepreneur to ask for $20,000, $50,000, up to $1 million or $5 million. But it didn't take that same polished, suited male attractive, tall individual to go in front of 7 people that looked exactly like him. I was one of the few women in venture capital, and I had 3 women partners by the time we left.
Wow.
And you know, you'd say that, oh, weren't my senior male partners so clairvoyant? They said, oh, we hired you guys. We thought you'd leave after 5 years to have kids. But we didn't. And we were there to support women entrepreneurs. And I can tell you this is a story of a very, very successful company where one of the women who was a senior vice president came in to do the pitch. And she was obviously pregnant to me and my partner. And we said nothing. The senior guys, we all decided to do the deal. And then I said to my partner, I said, I hope she sticks around. And I said, I know she will, but let's not tell the other guys because they'll worry about something they don't need to. So women in that day kind of had a support because there were very few women. There are now 100 times more women out there. But you have an advantage where you don't need to go ask for so much money. More importantly, there's a network of angels, successful women and successful men of color, men who now have their daughters enter the tech field, who are suddenly more open to funding a woman in technology. So it's a much different world today, and I think it's really there for the taking. And I encourage this type of meeting because you have a chance to build your network. And the great part about today's technology is you can keep your network very alive and very robust and build it very inexpensively. So good luck to all of you.
Life is a gamble, boy, so you know that you better play your cards right. If you're gonna take a chance, then you know that you better stand up and fight. This is just a game. So
I have the honor of working in a company that was actually started by an entrepreneur, and actually every day we sign on millions of entrepreneurs on our site. And it's a great place to be and talk about driving social impact. Our founder continues to this day stay as an entrepreneur, and he actually funds a ton of companies out there, small companies which have great visions. And for me, a moment is, I want to take a moment to just kind of like reflect on my time with here. And when I sit with him, the thing that strikes me is that over that weekend, what he built is a company that is still alive. And in many ways, what he tells us every single day, even as a founder and someone who's a shareholder, is connect to your consumer. As much as you have a vision of where you want to be and what you want to build, it is your consumers who are really going to make your company successful. And that is the mission and the principle that we hold true even to this day as we grow into a 15,000 employee company, is we take the time to connect to our consumers and learn from them because they have the great ideas. So that's one thing that I would love to leave you with, but I think answering Suzanne's question of where are some of the trends, I think a lot of my time at eBay is spent in helping out, doing technology due diligence for many companies and acquisitions that we have. And the trend that I see as we see, we're going to see a wave of companies go public this year or probably next year. And you all know what those companies are. As we see that, these companies are going to be under tremendous pressure to figure out how to grow rapidly once they become public. And the same pressure that most companies which are public today feel, which is really try to manage their top line and the bottom line. And as they do that, they are going to be looking at smaller startups and entrepreneurs who can complement their core services. So what happens there is you don't have the luxury of waiting for years to complement your core services. You have to do that in a matter of weeks or months, and these companies are going to be looking out for that. A great example is eBay's latest acquisition of Milo. And Red Laser are great examples of where our strategy was about growing into the local market and local search, and strategy of really expanding our mobile offering. And we were not going to try and build this all ourselves in the time that we had to compete. And that is when the companies turn outside and look for the great ideas and the great entrepreneurs out there that can provide that growth in the business. So that is a trend that I feel like we got to be riding that wave, and it's a great time for being the idea person in the room, and also wanting to really get your ideas and take them into the next level.
I'd say after being in technology and entrepreneurship for almost 30 years, I'll nicely date myself here, I think I've learned the most about entrepreneurship actually in the last 4 years of working outside of where what I believe is the bastion of technology and innovation and entrepreneurship, that's Silicon Valley. I think what's changing with entrepreneurship, and it is going through a major change, is that a lot of the innovations are happening on the field where we are working in rural areas, in areas that we don't even think of as needs here. So if you look at emerging markets and the fact that 50% of the growth for the next 10, 15 years are going to come from the developing world and the emerging markets, the kinds of technologies on innovation and entrepreneurship happening, especially with women, are happening in areas of India, China, Africa, Brazil, and they're in areas that like renewable energies, a husk power, a mobile phone connected to a microscope called CellScope, in clean water with nanotechnologies using a silver nanotechnology, and in being able to supply clean water for brackish water filtration. There are many such technology innovations that are happening in the field, and our ability to be able to take those, and there are a lot of micro entrepreneurs who are now starting to get to the capital markets. And what are they starting to use? They're using something called social venture capital, which happens to be a little bit more patient capital than you would see in the VCs out of Sandal, but they are out there. And an interesting piece of data I will share with you. In 2009 and 10, they just came out with a study about 2 months ago. The IRR on social venture capital was higher than the IRR on venture capital in, guess where? Silicon Valley. So you can see that this entrepreneurship is happening in many areas of the world, and you really see women in many of these different innovations. You don't need $200 million or $20 million to be able to innovate here, and this is to your point as well. The innovations are happening with smaller sums of money, sometimes even in social enterprises. And having those get the venture capital, the social capital, and being able to take it to market. In fact, there is a new asset class, believe it or not, emerging in social venture capital.
Later stage companies, so I'm in the fundraising area, but at the other end of the spectrum, which is companies going public. So I help raise money in the public markets and also late stage as a last round before going public. And the world has changed completely in the last 20 years that I've been doing this, on that end of the spectrum. Mostly because the markets have changed completely. So good news that I have for everybody is that the economy looks broken, but the economy actually is not broken, and that's evidenced by everybody here in the room. We all know that if you're trying to hire an engineer in Silicon Valley, there is no unemployment problem there. I think the rate is down to 3% now, and salaries are skyrocketing to show the demand there of the growth and the investment that's been made. If you're trying to find office space in downtown Palo Alto, that's different. However, the economy looks very broken out there. If you're looking at the S&P, the Standard & Poor's Index, or if you're looking at the Dow Jones Industrial Average, they've been relatively flat. They started and ended the last decade at about the same number, around 11,000. It started to climb lately. There's been some activity, so people get excited, but they also got excited in 04 and 07, and then it just kind of keeps plummeting down, and nobody understands what's going on. But this has actually been, my area, my field, and what I'll tell you is, There's been about $1 trillion invested. I use Silicon Valley as a global term to represent all entrepreneurs all across this country. But about $1 trillion has been invested over the last 10 years. We know that as a fact. We know that there have been great companies that have been created. LinkedIn is one that's obvious, coming out at a $3 billion valuation. Zipcar went public just a few weeks ago. But there are 100 or 200 companies standing at that starting gate, ready to go for several years now, that have huge value, and it's totally invisible in the S&P or the Dow Jones Industrial Average until a company goes public. So if you're looking at the major economic indices, you're going to be depressed. But the reality is they're just invisible. We don't have to go out and invest another $1 trillion. We don't have to spend 10 years building these companies. They're there. So a lot of what I do is being a cheerleader and being an information source. I don't go out and hype because all the good information is there. I don't have to make this up. I just have to let people know about it and get the right people there. And there's a lot of folks in the public markets. T. Rowe Price, largest IPO buyer in the country, Capital Guardian with $6 trillion assets under management, and others who helped me build my last company and are members again in my current company because they want to invest in the great companies that you'll be building. The venture community depends on great IPOs because this is a risk business, and they need to take risks on your companies. They need to be able to lose money on certain investments. And to do that, they have to win big somewhere along the way. And we know that IPOs are also important, a very important part of the capital formation process in this country, because 90% of all jobs created are actually after the IPO. So if nobody's gone public in the last 10 years, why is unemployment the way that it is across the country? We need your companies because this is where the growth edge of the American economy is. We know that these are the fastest growing. You're creating revenues and profits are growing at a much faster rate, potentially, than later. And so this is where we invest in economic growth, and it's done mostly privately right now. Because it's been stifled, I will say that I think the fundraising environment is much, much more difficult than it was even just a couple of years ago. VCs are going to want to see a lot of traction. They're going to want to see you investing yourself and your own funds. They want to see receipts from clients. They're going to want to see that you're actually producing revenues. It used to be that it was several years to creating revenue straight from customers. So it's a little bit of a reality check. The ability to have a good idea and put together a team and go out there and raise money, I think, is a thing of the past. I think you actually have to show traction early on. So don't wait, don't hesitate, get out there and start talking to your customers. We did that. We started talking to customers immediately and said, let's just get some activity going. We'll build the rest of the company on the way. So, and the good news is there's hope because the economy is going great. Innovation is clearly alive and well. And hopefully, if I do my job well, the rest of the country is going to figure this out and the road will get a lot easier.
Boys, so you know that you better play your cards right. If you're gonna take a chance, then you know that you better stand up and fight. This is just a game, so you gotta keep on playing. Cause you know what I'm saying, and you know that you might even win this tonight. Tell me.
Sure, most venture funds are alive for 10 years, some as short as 7. And when you look at how long it truly takes to build a company up and get it to profitability, not big valuation, but real generating cash on the cash of the company, you need time. And Mona will speak to this, and she is speaking to this, is the liquidity to the investor is at usually events when a merger has occurred and they can then receive stock in a public company or cash for the stock of the private company, or the company goes public and then they can trade after some lockup period the stock. When those exits aren't there, the venture people will have to look at, okay, if you're going to start a company in this sector, who will be a likely buyer of that company? And you better be able to articulate the 5 or 7 companies that would pay them real money to buy what you have because it fits in their product strategy or it complements what they currently sell to their customer base or expands their customer base into a new area geographically or an application. So you have to have a mind to who will value this at a higher value than the value I'm asking the venture or angel player to play at this time.
Well, and is the investor, from your point of view, are you looking for a minimum percentage return? I mean, at some point, is there just not enough money there, even if there are potential buyers, that it's not worth your while to get involved?
Yeah, this is the big money problem. The venture people need to put $15 million to work, but they can't buy more than 10% of your company, and your valuation is inconsistent with the math. So you really, if you don't need a lot of money, you're not going to go to the big venture funds, because they view their personal participation as so valuable that to take a board seat, they can't justify taking a board seat for $100,000. They have to put 15 million to work or 20 million to work. So you've got to find someone who can give you the capital and give you the time, because you will need mentors, you will need that network, will need their help. And then you have to say, well, if I'm going to ask for this 100,000, can I say to them that they can make 5 times their money or 10 times their money? But you have to look at a timeline, and you have to look at a probability, and you have to look at what the buyers of that type of company are paying as a multiple of revenue or a multiple of profits. So you have to think like a financier when you're asking a financier for money.